All right, then, let's get started. Thanks everyone for joining for another community AMA. Um, yeah, we have Shardo right off the bat setting us up with 6 nice questions. So, yeah, let's just get right into it. So, first question is, could you give us an update on what the team is currently working on? Actually, sorry, I just realized there was a question before that. And that is from JSweats, when real life meetup? Well, sir, as you know, we are an Anon team, so, far be it from me to stop a group of Lifinity people meeting up with each other, but as for me, I will not be participating, at least not now. How is testing of the bonk pool? Yeah, so the bonk pool is not going great. So what we've discovered is that the pricing data for bonk hasn't been very good. So in other words, the price publishers, the people who send their price data to Pith, which is then aggregated, that appears to not be that good. We're not like entirely sure why, but generally what we've observed is that the Pith price tends to be higher than DEX prices, like um, like regularly or systematically, I should say. Um, so yeah, so we're going to try one thing, which is switching from Bonk USDC to Bonk Sol to see if that will be any better. Um, to be determined. But yeah, because the pricing data wasn't that great, the pool had trouble rebalancing, which is not good for market making profit. So yeah, that's unfortunate, but not all hope is lost for that pool. So yeah, we'll see how the Bonk Sol pool performs, and we'll report back. Let's see. I guess, yeah, actually, never mind. Yes, okay, moving on to Shardo's question, the first one. It is, could you give us an update on what the team is currently working on? Yeah, so basically we've been like for the past few months, couple months, we've been like hardcore testing V2. And when I say testing V2, that doesn't just mean like testing specific pools, which of course we've also done, and like optimizing the parameters of each pool. That also means like testing V2 itself. And because we're just getting familiar with how it works and whether it's working and any issues that arose. And happy to not announce, but let you know, I guess, that like that sort of testing is mostly done. Like so yeah, like V2 is working well basically. Um so there is still like testing to do for individual pools, in particular like optimizing them. But going forward, the per pool testing should go much faster than it appeared to have gone in the past. Because in the past, we had this like more fundamental testing of like, is V2 working? Not like this specific pool, but V2 as a whole. So yeah, going forward, testing for new pools should be faster than before, which is great. So yeah, that's the bulk of what we've been working on. And things we plan to work on going forward. Although like ideally we'd probably like want to move like all of our pools to V2, or at least create a V2 pool for them, if not migrate them. So yeah, after that, we will be working on moving our front end or rewriting it in React. Right now, it's written in what was it? Starts with a V. Some framework that I'm not really familiar with. Versal? Vue. Yeah, that's right. Thanks. And yeah, so rewriting it in React will make it more snappy and easier to work with, I believe. So that's one thing. There's the secret project thing that we've mentioned before. Still working on that. We want to work on our next dashboard iteration. Plenty left to do there. And we want to add a custom RPC. There's occasionally been like RPC issues for people. And the ability to like choose your own RPC could alleviate some of those problems for some people. So yeah, I want to add that. So yeah, those are like some of the things in the pipeline, not all, but yeah, just to give you an idea. Let's see. Yeah, so next question, 1.1, and what's upcoming over the next few months. Well, I guess I kind of just answered that. Yeah, okay. So let's see. Number 2, you had teased some big brain emoji that the team was working on a month or two ago. Is that still a work in progress or did it have some conclusion? Yeah, we're still working on it. So this isn't like a certain thing. It's not like we are 100% going to like launch this thing. Um, it's still like partially in the ideation stage, partially in like actually developing it stage. So whether it's viable or not is probably kind of dependent on like how the Solana ecosystem is doing as a whole. But yeah, that's probably about as much I can say. Number 3, anything to share on how the bonk pool is doing? Let's see. I just talked about that. Yeah, I just talked about that. So should have that covered. Number 4, when can we expect the Flare owned liquidity and protocol owned liquidity update from you? Could we have an announcement of an announcement for it? Yeah. So like I asked a while ago, and it looks like the community wants it to, or asked like I said we can do it on a quarterly basis, and asked if we should do it immediately on some day in January when I asked, or do it like the standard quarterly reporting frequency, which is like after each 3-month segment. So our first update will be at the end of March, so about a month from now. I don't think we'll do an announcement of an announcement, or I don't know. Is that what you meant by an announcement of an announcement? Yeah, I guess I never like officially announced that that's what we'll be doing, but yeah, I guess like next time when we actually do release the update, I'll just mention that hey, going forward, we're gonna be doing it on a quarterly basis type of thing. I mean, I could announce it, but I don't know. I'm not sure if people care to know the announcement of an announcement. The last time I tried an announcement of an announcement with the Pyro Sorceress, like people were like not into that shit. I mean, they like Pyro Sorceress, but like it was just like people were kind of whatever about the announcement of the announcement. Well, also to be fair, like I split it up into like 6 or 7 announcements, so maybe that was the problem. Anyways, all right, next question. Number 5. Lifinity has consistently been number 2 on the volume charts for a while now. Is there something concerning that you foresee in the near future, or are we all good? Potential competitors, perhaps, or something like that? Yeah, so I would say we are all good. This is kind of around the like the place we've been on the volume charts for as long as we've existed, as far as I remember, like something along these lines. I mean, sometimes we've been lower, But we've never been number one, not consistently anyways. There was that one day when we like screwed up the USDC USDT pool and had like over 30 million in one day. But yeah, that doesn't count. So the thing is like our goal is never volume. This is the thing you should always keep in mind. Like volume is basically the wrong metric to be looking at. Volume is good for catching eyeballs, but it is not necessarily good for profitability. It is necessary for profitability, but it's not sufficient for profitability. If we just wanted volume, it would be easy to get more. We just lower our fees, we just increase our concentration, and boom, more volume. But that doesn't necessarily translate into more profit. And that's what we're always trying to maximize for, is maximum profitability. And of course, that also means even if it comes at the cost of less volume. If less volume means more profit, then like we're all for that. So yeah, like wherever we land on the volume charts, like we're kind of okay with it. I mean, like if we were second right now, but like a month later we're like number 10, then that probably means we're doing something wrong. Or like there was some kind of significant regime shift where like we're somehow no longer viable or something. But you know, like when we're like up there, as we have been like since our inception, that basically says like, well, at least ballpark, we're probably like okay. Like there's nothing obviously going wrong. I mean, volume can't tell you whether we're optimizing correctly. It's just one number. But like it shouldn't get you worrying is what I'm trying to say. So yeah, I hope that clarifies that. Yeah. All right. Number 6, could you tease an explanation of how the team thinks about optimizing its pools for market making profit? Are you involved in this or is it the other team members? Yeah, so I'm not involved in like the data analysis and parameter tweaking. Basically like after the devs do that kind of stuff and reach conclusions, then they will let me know what the conclusions are, but I'm not like involved in the process. So yeah, so you say, how does the team think about optimizing for market making profit? The answer is that we don't. I mean, just to reiterate from the previous question, like we're optimizing for profitability, and profit, or in other words, net APR, is the sum of trading fees and market making profit. So like if we were just optimizing for market making profit, I can tell you like what that would look like. What it would mean is basically we'd only do trades where there's a large discrepancy between DEX price and sex or centralized exchange price. I always feel weird about saying sex. Um, because that's when you know there's a price dislocation and you know that the DEX price is going to move to the SEX price. And so if you buy or sell at the DEX price and then do the opposite using the, or wait, if you, yeah, that's the wrong way. If you buy or sell at the SEX price, you know that the DEX price will eventually converge to you. So you basically like are front running that in a sense. So then, at least like on short time scales, you know that you are like buying or selling in the right direction. So that's how you would optimize for market making profit. But if you literally only cared about market making profit, you would do that to like an extreme where like so here's the thing you would miss out on is like say when there's no volatility and SEX price DEX price is like approximately the same, then because there's no price movement, we don't know where price is going to move next. We're basically like ignorant about that. So we have no like directional view. And for that reason, we would say no to all trades because we don't know how it's going to affect market making profit. In reality, we don't think like that because we want trading fees. So if we think like if price is like relatively stable right now, um, then like we want to get a trade, even though that like the trade will like slightly make our pool imbalanced, right? And that's what puts us at risk of impermanent loss. But like we're okay with that because we know that on average, the trading fees we generate from that are going to be greater than the risk of impermanent loss. And that's why we like in practice we do take those trades, right? Because we're optimizing for the sum of trading fees and market making profit, not just market making profit. And I mean, you could do the thought experiment of the opposite as well. Like, what if we optimized just for trading fees? That one's pretty simple. You just like, actually, is it? Let's see. Yeah, I guess it's not like super simple. But basically, like, you would concentrate a lot more so that like you're always at the top of the book. You're like leveraged to the hilt. And what that does is like now everyone's going to trade against you. Like every trade is against your pool because you have the best liquidity. What that also means is that when price moves, you're going to be caught on the wrong side. So you're going to have major and permanent loss because you're like way more concentrated than you should be. And so, yeah, you can see like there's a trade off, right? You can't just optimize for one. If you optimize for market making profit, it's going to come at the expense of trading fees. If you optimize just for trading fees, you're going to have a lot of impermanent loss. So, like, you have to think of them simultaneously. And yeah, it's a multivariate optimization problem. I hope that gives context and, like, yeah, answers whatever you were looking for. Let me know if you have any follow-up questions on that. All right. Next question, we have Pedra Norte. I probably mispronounced that. Oh well. Best pools are closed at this time. Will there be opportunity to those who missed the boat to get in? Yeah, so maybe you are not aware, but the pools that are closed are all full with protocol owned liquidity. So it's not that like some privileged or lucky individuals got to deposit and they get to experience this nice APR. Rather, it's that all the liquidity is owned by the protocol. And so whatever yield that liquidity generates is split proportionally among VE Lifinity holders. So basically, if you want exposure to the yield of those closed pools, the way to do that is through VE Lifinity. So for example, you could buy X Lifinity, convert it to VE Lifinity, and yeah, then you'd have exposure to those pools. In case you're not aware, the reason we do that is because it's really important for us to control the level of liquidity. Like we do a lot of optimizations for the parameters of our pools, and those optimizations are specific to like how much liquidity there currently is. And if the amount of liquidity was always fluctuating like up and down, then we would have to like redo these optimizations and do it like continuously. It would be like always messed up, right? Because like people are always depositing and withdrawing. It would not be pretty. Um, and also like there is like an optimal level of liquidity that leads to max profitability, and that's what we aim for. And if we just open the pools, then like like no one would think about that, right? It'd just be like, oh look, nice APR, I'm gonna deposit. Like they're not thinking about like how whether this is like good for the pool overall and like how that will affect APR or anything like that. Anyway, so we have good reason for doing that. Um, and yeah, I guess you could say you did miss the boat, but also not really because you can still get exposure to it through our tokens. So yeah. All right, next question, Shardo. Context on I think this is a quote. Oh, never mind. Context on, could we have an announcement for it? Since the Flare owned liquidity and protocol owned liquidity update is like a shareholder announcement kind of a thing that might affect Flare and Xfinity prices, I figured people might be interested in knowing the info on the exact time it will come so that they can adjust accordingly. I see. Yeah, I guess that makes sense. Um, hmm. I'm not sure if I want to like promise a time. I but yeah, also I'm not sure that like I mean that kind of makes sense, but also not a lot because like usually like the thing that affects like asset prices is like earnings reports, right? And that's like our monthly revenue figures. The balance sheet update is like that's basically just a function of like asset prices, right? It's like how much is like especially how much is our soul bag worth right now, you know? Like that's basically the gist of it, right? So I mean like in the meantime we've bought some assets to put into like new pools and stuff, but like it's not a huge amount, so to me like it's more about especially for like flares or I guess Xfinity or Lifinity as well, like knowing the intrinsic value, like if people want to do that. But I think people know that the prices of the assets are above the intrinsic value. So it's not like there's going to be this thing where like, yeah, we announce it and then like, holy shit, like these assets are below their intrinsic value. Easy buy. Like that's not going to happen. At least not like right now. So, yeah. Um but I mean, we'll probably normalize the date that we announce it, at least, I think. And I mean, we usually like announce things around the same time, like when we make like our Flare buyback announcements, our revenue announcements. Those are usually like an hour or two after right now. So yeah, it'll probably be like about the same. I'd be surprised if like, you know, people see the balance sheet and that leads to, I don't know, significant buying and selling. I don't know. It's hard for me to see what the reason for that would be. Uh, but yeah, those are my thoughts on it. What do you think? Is that reasonable? All right, next question. Snowball says we are now second in terms of volume on Solana monthly. Is a new increase of the fees envisaged to remain hidden and not to incite the other DEX to lower their fees? Um, so let's see. I don't think so because so for first of all, the lowering the fees part, like our main competitor at least right now is Orca, and the most important pool is Sol USDC, and they have multiple fee tiers. They have 0.05, 0.3, and 1%, I believe. And so it's really up to the LPs to decide like what fee tier they want to use. And our fee tier, last time I checked, it was 0.08%. So like we're in between their lowest and their second lowest. And yeah, that is something that we've changed from time to time and will continue to do so. But it's more a function of like how much total volume is there on Solana and like how aggressive are the arbitrage bots and like things like this, and less about like the other dexes or like the part of other dexes that the dexes themselves control. So like the amount of liquidity on Orca, for example, Orca doesn't control that, right? And so it's like not that. Um, so we don't need to like try to like fight them in that way or try to like change the behavior of the dex itself. Um, Yeah. And the other part you asked is to remain hidden. I'm not sure what you mean by that part. Remain hidden. Yeah, I'm not sure. Like, so yeah, we're set. I kind of talked about volume earlier in response to Shardo, I think, one of his questions. And I mean, basically, like the same logic there. Like, where we sit in terms of the volume compared to other dexes is like not very meaningful. So, like, just to give another hypothetical example to demonstrate this, say like Radium suddenly like jacks up their liquidity mining. So suddenly, like, I don't know what their figures are right now, but say they do like $500,000 worth of Ray in incentives for like a bunch of pools. I mean, that's like an insane amount, right? So then like everyone's gonna LP on Radium. Fuck, I'm gonna LP on Radium for those rewards. Like it's probably, it'll make the impermanent loss worth it. Um, and then just because they have tons of liquidity, they're gonna get tons of volume, and so we'll probably get knocked down to third place. But that's totally fine. That's probably actually like good for us because now Radium has more Sol USDC liquidity among others, and the others like we don't care about because we don't have those pools anyways. So it's kind of like whatever. I mean, it's like good for Solana, so I mean, all for it. But like for the Sol USDC pool, like there will be more liquidity, and it's actually like suboptimal liquidity. It's like more liquidity than is needed because these other protocols don't try to find the like right amount of liquidity or whatever. They just want as much as they can get. And so the more there is of that, that means there's more liquidity that we can arbitrage against, or arbitragers can trade between our pool and Radium, and that increases our volume too. And it's good volume because like arbitrage volume is like volume where like we're using the centralized exchange price. So it's kind of like the thing I explained earlier where it it it's a point in time where we have like a directional view sort of. It's like centralized exchange price is the right price, DEX price is the wrong price. And we're trading with the centralized exchange price, so it's like a good trade basically. Um yeah, so all that to say, I forgot what I was even talking about. Let's see. Yeah, should we increase our fees? So yeah, so I mean, oh yeah, so volume. So that's just another explanation of like why volume is not a good indicator, really. Um, or like yeah, where we rank in terms of volume, not a great indicator. That can change for a variety of reasons, and yeah, ultimately we just optimize um, for profitability. And yeah, so I mean, like, it's totally possible that an increase in fees is warranted, but and we're always like looking for that to see if like we should increase or decrease our fees. Um, but yeah, we wouldn't base it on like volume rankings. Yeah, it would be based on other things. All right. Next part of your question. Have you seen that a whale who has been buying for several months with 5 or 10K has a very, very big wallet? Yeah, I think someone mentioned a while ago, like there's a guy buying in like clips of 5K usually, and that they have 6 million in their wallet. I don't think, or at least I never found out who that is or like what's up, what their deal is, or like what they're trying to do. Yeah, I just have no idea. But yeah, someone brought that up in the chat once. And then continuing, you say, at first I thought it was only 8 million, but finally he has a second wallet with something like 32 million in Sol. Oh wow. Yeah, I have no idea. It's it's a VC that's not a VC. Not a proper VC anyways. I don't know. I mean, it could just be a rich guy But I mean, like, no one's reached out to us, be like, hey, by the way, we're gonna buy a shit ton of your tokens. So I have no idea. If you're here, raise your hand. Good strategy. All right, Pedro Norte. Let me know if I'm mispronouncing your name. Now I'm curious. Oh, thank you for this explanation. Yeah, no worries. Promino asks, is there any time frame for when the WBTC USDC will be opened? Um, I'm not sure, but yeah, honestly not sure. But I'm pretty certain that we will open it. Um, yeah. Let's see. So I haven't even checked like how much liquidity is on the other exchanges, and that's like an important factor, right? And also like trading volume, I don't like yeah, I don't know. It might be like tiny cuz I mean like there wasn't like a ton of Bitcoin trading volume on Solana anyways, even back when we had Solid BTC. And then it was just impossible to trade it for like a few months. So then it's probably like even less than back then. I mean, also just because like Solana wide volumes are down. So yeah. Yeah, like so it's probably like not a big deal that we're like waiting a little bit for like liquidity and the demand to trade it, waiting for those to return to a certain level. But yeah, I haven't checked with the devs on the specifics of that pool. But yeah, I mean, we noticed from the moment that Radium opened their pool, and now Orca has as well. So yeah, definitely looking to open it back up. But yeah, no time frame for now. All right, Shardo says, yeah, it's okay as long as we know the date. Thanks for answering all the questions. No problem. All right, Promino asks, will we open a Sol ETH pool? Yes, so that's another one where we definitely have our eyes on it. And I think last time someone asked, I said the plan is to open it once we migrate all our existing pools to V2. So really right now we're just like focused on like getting this whole V2 transition over with before like starting to do other stuff. Yes. Oh, Orca Whirlpool has an ST Sol ETH pool with 0.3% fees and decent 24-hour volume. Yeah, so we could look at that as well. Um, yeah, but definitely Sol ETH. I mean, I assume that has much better volume. If ST Sol ETH has better volume, it's probably only because Lido is incentivizing that pool. Yeah, Lido's like the main liquidity mining protocol right now. I feel like they're they're quite rich, splashing things around, except for us. uh, Sad. All right, Smitten asks, "How are you doing, Durden? You sound energetic as always, which is good. But don't you feel like you need some time off? Plus, I've missed those. Let me take a sips. All right, let me take a sip." I did take a sip before that sip, actually. I just didn't say it. Um, yeah, because you guys make me so self-conscious of it. So, and I have to try and be covert about it. Um, how am I doing? Let's see. I think I'm doing pretty good. Yeah, yeah, I'm doing pretty good. Take some time off. Like, for me, I actually enjoy like working in spurts. So like doing some work and then taking a short break and doing some more work, that kind of thing fits me much better than like trying to work like for hours on end, like a 9 to 5 type of thing. Um, and this job lets me do that quite well. So I think it fits my temperament. quite well. So like I don't feel the need to take time off, or like to put it differently, like I feel like I take time off every day. you know, it's just in like short intervals, and that works really well for me. So yeah, it's good. Snowball, if you're here, raise. Oh, yeah, this is the. Oh, there's three people. What? Oh my God. There, there's many millionaires. Just me, Lord Prince. You guys have been with us for a long time. I didn't know you guys were so rich. This changes everything. All right, Ideal William with the thumbs up. Thanks for the thumbs up, homie. I don't think I've ever seen you before, so welcome. Unless you're WTB, then get the fuck out. um, I had to say it, guys. Someone had to make a WTB joke. Epromino says 500k volume in the last 24 hours. This is for WBTC USDC. 500k. That sounds pretty good, actually. Half of it happening on Radium. Actually, wait, actually, no, I'm not sure. So I was thinking, like, in terms of our pool's volume, from what I remember, it was something like 200k per day or something. But I don't know, like, what the global volume on Bitcoin on Solana was. So that's why I'm not sure if, like, 500k is less or more than what it used to be. Yeah, maybe if we look at our historical numbers, if we have those, yeah, we could check. Anyways, let me mention that to our devs again. Although I'm pretty sure like they have their hands full, and like, yeah, like I said, like focusing on V2 for now. But yeah, yeah, thanks for telling me the numbers. All right, Lord Prinz, just tuning in a few minutes ago. Project D's already been discussed. Yes, sir. Uh, oh shit, I got nothing. I tried to make a joke. I got nothing. But anyways, apparently you're rich, Lord Prinz. You a millionaire now. When did that happen? Tell us your story. I took a sip. How do you like that? Now I don't warn you anymore. I just take it and then let you know after the fact. Suck on that. Really, I'm just waiting for the next question. I'm just trying to entertain y'all. Probably not doing a very good job. Oh, actually, I saw this very funny or interesting thing that I thought maybe you guys would appreciate or could enlighten me. So like I was looking like on a previous community AMA, I think I mentioned like maybe I'll just stop doing the Twitter Spaces because it seemed like not many people were joining. So I kind of like looked back on the previous ones to see like how many people had joined, and so last community AMA there was 27, I think, and then 2 month no 3 months ago there was 70 something, but 2 months ago there was over 1,000 people who had joined our community AMA, and I was like, what the fuck? It has to be bots, right? Like, who are these 1,000 people? I have like zero idea. Oh, actually, I just remembered. Do you remember that time when like at the end of the community AMA, I checked, like I turned my phone screen on to see the Twitter Spaces, and then like it had been turned off, and like that had never happened before. Like it had just ended partway through. like halfway through. And I think that was that day. I think. I wonder if that was related. Anyways, anyone know the answer to this mystery? Who these 1,000+ people are? All right. Ipramino asks, what do you think of the recent limit order feature on Jupyter? Do you think it's possible or a good idea for Lifinity DEX to integrate with the limit orders in OpenBook? So, all right. So first, what do I think about Jupyter's limit orders? So actually, I haven't like looked super deep. My understanding is that you set a limit order, and then as soon as like executing the limit order or executing an order on Jupyter will give you the price that you specified, then it is executed. So it's like kind of different than a order book where you're not initiating the trade. You just place your liquidity and then someone else, the taker, executes into your bid or ask. Whereas on Jupyter, you like set your liquidity, and then after price after price crosses your threshold, then Jupyter will like execute it for you, type of thing. So slight difference. So interesting. I think like with this, you don't really get the benefit of. Well, I guess you kind of do. Like, I was gonna say like with Jupyter, it's an aggregator, so you get the best price among all dexes. So I guess like you can execute your trade as soon as like there exists a route where it gives you your desired price. But that does mean like it'll happen at least slightly slower than it would if you had a limit order on a limit order book, I think. Yeah, I think so. But like not meaningfully different, probably. But yeah, still true. But yeah, like I guess I'm not like 100% on like I'm not sure what the utility is. Like what does this give you that a limit order book doesn't already? Is kind of my thought. Because the execution isn't going to be like different per se. It's not like you're going to get better execution because you are specifying the price. Like that's the price you're going to get. Just like you would on a limit order book. So it's not clear to me what the advantage of this feature is. Let me know if I'm missing something there. And then do we think it's a possible or a good idea for Lifinity DEX to integrate with limit orders in OpenBook? So actually this is something I was talking about with one of the Friction devs. Friction's that options protocol that shut down recently. And I was also talking with Ellipsis Labs, the new order book that's being created right now. They haven't launched yet, but like supposedly there's supposed to be an improvement over OpenBook. They have some like nice features, like for example, I think the one I think I remember is like on OpenBook you have to like cancel your order and then withdraw. It's like a two-step thing, which is like pretty inconvenient. And I think you can do that in like one step on Ellipsis. And they have like some other stuff, as well as like they're already thinking about their V2 and features for that. So pretty cool project. I mean, I'm excited about limit order books being improved. Anyways, so as for the idea of Lifinity integrating limit orders, so right now I think it's probably not a good idea. Oh, by the way, yeah, you say, are you familiar with Radium's integration to OpenBook? Yeah, yeah, because like I mean, that's kind of like their selling point, or like, yeah, it's what they've always done. They take their Well, actually, I'll just read what you wrote. So, a couple key takeaways from Raydium stocks. The AMM will begin sharing liquidity in pools and market making on the OpenBook order book. B, users on any OpenBook GUI will be able to trade against liquidity from Raydium's AMM. Yeah, so like I think so this can make sense in a world where like everyone trades directly in an OpenBook GUI. But I feel like that's not really where we're headed because like Jupiter is kind of the way as far as I see it. Because the best liquidity right now is on Orca and Lifinity, like, right? And I mean, people who are like less familiar with the ecosystem, yeah, maybe they just trade directly on Orca. Like with time, as people get educated, like it's such a no-brainer, right? Just trade on Jupiter. Um, Unless you're like a market maker, then sure, like it makes sense to. I mean, because yeah, you need a limit order book for that. So like yeah, or I guess you could do it on Orca. But yeah, like you would like place orders on one of those, and you wouldn't do that through Jupiter, sure. But like if you're a retail trader, then you're like the end state. It seems like to me the ideal or the like the almost inescapable end state is that everyone's trading on Jupiter. It's just a matter of education. So yeah, I am familiar with that. So the reason I think it doesn't make sense for Lifinity, there's a few reasons. So let's see. So one is the problem of latency. So on OpenBook, if you place an order, then that liquidity is just sitting there until you cancel it. And it doesn't matter what the Pyth Oracle says. Once you place that liquidity on OpenBook, it's there. And either you cancel it or someone takes that liquidity. So the problem with this is that now we're in a race with other traders to if our orders get stale, or in other words, the price that we put the bid at diverges from the current Oracle price sufficiently, and traders are going to try to snipe those stale bids or asks. And we're going to try to cancel them because we know that, oh shit, now it's a bad price and we don't want people to trade against it. So we're going to be in a race against them. And this is bad because well, one, like if they win, it sucks because that's impermanent loss for us basically. And then two, even if we win, that probably means we're incurring fees. I mean, so first of all, just like the fees of having to place orders and cancel them continuously, updating it continuously according to the Oracle price, which is always changing. So that has fees in and of itself. But then it's worse when you're you're competing against these traders who are trying to snipe your stale bids. Because there's priority fees, that means in order to beat them, we're going to try to outbid each other with priority fees. And so now it's not just the cost of like, you know, the cheap Solana transaction fees. Now there's also priority fees, which can get pretty high, and they will be bid up to the amount that the trader expects to get in arbitrage. So like buy or sell into our bid and then buy from a centralized exchange, and like whatever they can win from that, that's the limit of how much they'd be willing to bet on the priority fees or lose on priority fees. And that can be like, it could be pretty large if like price is volatile. So yeah, so those are two reasons. A third one is that the OpenBook itself, actually I forgot if OpenBook does or doesn't. At least Serum had a fee that they charge, right? Because I mean they're a DEX. Like every DEX they have a fee. OpenBook might not have it right now, and they might not later. But like in general, even central limit order books have a fee, and so that's a fee on all of our volume that we generate on a central limit order book that we have to pay to the central limit order book. So that kind of sucks because they take, something like 0.04% of all our volume, which, you know, can be quite large in total. So there's that. Let's see. I feel like there was another downside. I mean, I guess the other downside is like, so I don't really see an upside. It's like, what do we gain from doing all this? Like the one possibility you mentioned is, yeah. So like if there's a ton of people trading on open book GUIs, like if that was like the default trading place, then I think that makes sense. Because in that case, it's like it's as if the open book GUI is the Jupiter. Like it's the place where everyone goes to trade. Like then it would make sense. But since that's not the case, and I don't see like a scenario where that would become the case. Like I guess if I had to imagine a scenario, like it would be something like, you know, a bunch of TradFi people come in and they're used to central limit order books, so they they do everything there, and then their volume is so large that it's like not even comparable to retails. So in that scenario, yeah, maybe it becomes worth putting our liquidity there. I don't know. I don't know. It seems like far fetched to me. So probably not. Yeah, I hope all that made sense. But yeah, so like some things that might make it more feasible is like and yeah, like I said, I kind of talked to Ellipsis about this, and it sounded like they might be doing something along these lines. Is like if you can include arbitrary logic in your bids and asks, then that might that would at least help. So for example, if I said um, limit buy for Sol at $22, as long as pith price doesn't go below X or something. So in that case, you're basically making it impossible for traders to snipe your stale bids, because as soon as it becomes profitable for them to do so, it has this custom logic that says, oh, well, now the pith price is too far from the current bid, so now you can't trade against it. It's like you don't need to do the whole canceling thing that I was talking about earlier. So like that would help with it. I don't see how we can get away from the central limit order book fee, and also just the transaction fees it would take to place orders and cancel them. So yeah, like if there's, I don't know, I don't even know if this is possible, but like if if you could make it so that you have like a fixed structure of bids and asks that get placed according to both the pith price and your current inventory. So basically, you're just trying to, if you could make it so you could replicate. Okay, so I'll just say, Lifinity Dex has a price curve, right? Just like every Dex has a price curve. Constant product market makers have a price curve, and it tells you like, given this much of each asset, what is the current price of the asset? And so if we could replicate that curve on an order book without having to continually like place new orders and cancel them each time the Oracle updates, if the bids and asks could be auto updated according to the pith price, then like we just make one transaction and then we're like good for life. It just keeps providing liquidity and updating our bids and asks according to the pith price. Like that would be feasible. Then it's like we almost have to do nothing extra. It's just like a one-time transaction, and then yeah, it's like Lifinity Dex, except it's in the form of bids and asks. But Yeah, I don't think anything like that is gonna come anytime soon or ever. That sounds like pretty custom and maybe not easy too. And I don't know, it could be like computationally too expensive. I I wouldn't know. Anyways, I hope that whole discussion gave you some context around that. Time for a sip. Ah, good sip. All right. Let's see. Well, I'm looking on Twitter, our spaces. We have 4 people, including myself. What happened to last week's, or 2 weeks ago, I guess? 1,000 people from then. So unpopular. Uh, Pedro Norte asks, you can stake as many flares in a vault as you like, correct? Yes. Yes, you can. Just so you know, if you stake one flare and then you later want to add more, you will have to unstake first, then add more flares, and then restake everything. Uh, so yeah, it's kind of like a 3-step process. But yes, it can be done. Lord Prinz, the millionaire, quality listeners greater than quantity listeners. Agree. Agree. Are you calling yourself a high quality listener, Lord Prinz? It's kind of what's the word? Oh man, I'm only getting haughty, but like that's an old biblical word, I think. No one uses that word anymore. What's the opposite of humble? Haughty. Uh, wow. I really can't think of the word. Oh well. Pedro Norte says one more. The rewards for staking, so they depend on the market, or is it a set amount of Lifinity per flare? It does depend on the market. So let me just link you to the article or our tweet thread explaining it. But the TLDR is that the more people who are staking, the less rewards for you. Or the more people who are staking and or locking, the less rewards per staker. And if you go to our NFT page, it shows you like how many people are currently locked and staked, and also how many or your annualized amount of Lifinity tokens you'll receive. Yeah. So yeah. All right. Apromino asks, what do you think of Hadeswap's bonding mechanism to increase protocol owned liquidity by selling Hades on 30 to 40% discount? So I actually wrote a thread about this whole mechanism, why this like ohm style bonding is like basically inefficient. Um, so I'll try to explain it here again, and maybe I can. It's probably like in my Twitter on my Twitter page. The pinned message is my thread of threads, and I think it's in one of those for those interested. But the TLDR is that this whole mechanism is basically outsourcing the selling of your token to other people. So like what we need to ask ourselves, like, what does Hadeswap actually want here? What they want is USDC. What do they want that for? They want it to pair with their Hades token so that they can increase liquidity. So how can they get USDC? Well, the most straightforward way of doing this is to sell Hades on the market. But that is extremely unpalatable. No, like your Hades holders will fight tooth and nail against that. Like it'll be called dumping, right? It's like the protocol is dumping on us. This is totally unacceptable type of thing. So then there's this clever bonding mechanism that kind of hides that dynamic. But ultimately, this is the same thing. But they have to pay a price, the price of, like, they have to do it inefficiently, so that they can, like, cover up. I mean, damn, I didn't even know it was 30-40%, but I mean, that's a lot. Yeah, there's a thread. Thanks for the link. And 30-40% is like a lot. But yeah, so what this does is like, so people will buy your token at a 30-40% discount in exchange for, do you know if they're selling it, they're selling Hades for USDC, or are they selling it for Hades USDC LP tokens? Because if they're selling it for Hades USDC LP tokens, that's even worse. They're like screwing themselves, basically. They should sell it for USDC at least. That would be twice as better. For NFTs or SOL. Oh, this is not for liquidity of their Hades token? Or is it? Oh, it's for SOL to pair with Hades. And then the NFTs are for NFT SOL pools. Liquidity for their NFT SOL pools. Oh, so this is not related to their liquidity for Hades token at all? Well, never mind then. Apologies. Ignore everything I said. Maybe. Let's see. So like they're trying to own their NFT SOL liquidity. I see. Interesting. So like I guess yeah, don't ignore everything I said. Like still the bonding mechanism has this issue. Like so they would ultimately still do better if they, sold Hades directly for NFTs or for SOL. But again, that's unpalatable, so they have to do it at this discount and blah blah blah. If you want to understand more why that's inefficient, read the thread, I guess. I guess more interestingly, um, let's see. Yeah, sorry, I'm so like ignorant about the details. I'm just like having to ask questions. Like, do they accept it for any NFT or like a very wide variety, or is it like very limited, like blue chips only? Because like I would imagine if they accept a wide variety of NFTs, okay, just the top 10 blue chips for the first phase. Yeah, I think that I'm sure that makes more sense. Um, yeah, I mean, I guess they can get more liquidity, which is good. On the other hand, this is like clearly bad for their token or their token price. Um, yeah, if you're continually selling Hades, which I also have to ask, is the Hades locked for a week? Is it like the same as the Olympus bonding mechanism, or 5 days, a week, longer, a year, 30 day? Yeah, 30 days. So I mean that's like longer than Olympus, but still like relatively short. Like you're not taking on. I mean, 30 days is a lot more risk than just 1 week, I guess. But Yeah, like let's see, they then added another 10 pools for the second phase, the ones they need more liquidity given the overall market volume for those collections. Yeah, I don't know. I guess I mean it's certainly interesting. I uh I question the viability of it, I guess. Um like the amount of liquidity that they can gather is so dependent on the price of Hades. And Hades, if you're just continually selling it, I don't know much about Hades. I don't know if there's like revenued anything or if there's a reason to lock it or anything like that. But if there isn't any other mechanism, if it's just like a speculative governance token or whatever, then if you're continually selling at a 30 to 40% discount, I think the price will just keep going down, right? Because I mean, the thing about these bonding mechanisms is that the people buying the Hades token, I think most people are trying to do the arbitrage where they're basically speculating on a 30-day period. You're like, okay, I'm going to buy Hades at this discount. I'm betting that price will not go down more than 30 to 40% during this time period. Therefore, after the time period, I will be able to sell this for a profit. I think that's what most people are doing. And I don't think, like, if people believe in Hades, the token, um, yeah, well, yeah, I don't know. I I kind of doubt there's like many of those kinds of people, just like looking to accumulate Hades, and so exchanging NFTs and Soul for it. Like I actually did this bonding mechanism arbitrage a bunch when Socian Protocol was they had their whole bonding thing. Well, I guess I did it with Invictus as well. Back when those two were still live. Um, I just did the arbitrage, and like for them it was like even easier because let's see, Invictus was 5 or 7 days, so like quite low risk. And then let's see, Socian it might have been longer, depending on the token, but yeah, some of those were pretty juicy. And I wasn't there to accumulate tokens. No way. I was there to just do this arb. Let's see. Promino says the protocol has 0% fees at the moment, but Hades holders can submit a proposal to increase the AMM fees, and then may share the fees among the holders. Right on. So a clear path to rev sharing if they wanted, which is cool. Um, yeah, I don't know what to say. Like I'm also like not uh I don't like fully understand the relationship between Hades and Tensor. Like it seems like Tensor has all the tech, right? And I'm not sure what does Hades have. Like or what are the various reasons for wanting to trade on Hades versus Tensor? Like you basically just trade on whichever has better liquidity, right? Well, except that Tensor like aggregates. So wouldn't you just trade on Tensor? So Hades is like another marketplace, but Tensor is kind of the go-to. Promino says Hadeswap always aims to have the deepest liquidity. I mean, yeah, but like every NFT marketplace aims for that. I mean, I guess so. Hadeswap is trying to do this by buying all this liquidity, but so I guess there's also the question of okay, so they buy this liquidity and then how do they provide the liquidity? Do they do it on a constant product curve or do they concentrate it? because like there's problems with both. If it's a constant product curve, your liquidity is probably not good at all. It's just like too broad, that you're not going to get like any trades or very few. It's certainly not going to give you the deepest liquidity. And if you concentrate liquidity, well, it's very easy to concentrate too much. And then you like the price goes outside your range, right? So then you're providing no liquidity because you're outside the range. Um, yeah. So the and like the optimal parameters for like how to do that is like it depends on each asset, right? So how do they determine that? I mean, I kind of like what they're doing in theory. It just seems pretty difficult. I mean, it's kind of like what we were kind of hoping to do with our bribing mechanism, but for practical reasons didn't really work out. Like a major reason is like we learned actually we don't want exposure to every token under the sun. And if you open it up to bribing, that means other protocols get to choose which tokens that we hold. And that's kind of a scary thought. um, yeah. Pramana says, with regards to underlying tech, I believe only Elixir is deeply investing into it, where they fractionalize each NFT into 1,000 tokens and put the liquidity into a concentrated liquidity market maker pool. They're now moving their fractionalized NFT SOL pools from Raydium concentrated liquidity market maker to Orca Whirlpools. Okay, yeah, so I mean, that begs the question of what price range do they choose? And also like yeah, I don't know, like this fractionalized NFT thing, I haven't ever seen it work out on Solana or Ethereum. Maybe it has worked somewhere and I'm just not aware of it. Totally possible. But I think it just seems like people want whole NFTs, you know? Like maybe eventually we'll reach a state where NFTs are so financialized that people don't mind having fractions. But right now, we're still very much in like, the PFP mindset phase. People just want whole NFTs for the most part. Yeah, like remember when there was the solvent protocol and that just never took off. People didn't really want to trade these fractions. I mean, I guess that could have partially been due to like how cumbersome it was having to convert back and forth, and then the fees were also quite large. I think it was 2%. That's big. So that probably contributed to it, but like even if there were no fees, like imagine you can fractionalize for free. It's like who would do that? I guess you'd do it if you'd expect more volume by fractionalizing it, which in theory should make sense, right? Like if you can trade something in smaller units, then that should increase your trader base because people don't have to buy whole things. Like you've heard the whole thing of like people being like, "Oh, but Bitcoin's so expensive, I can't buy one." Like people who don't understand that you can buy fractions. And so when you educate those people, hey, you can just buy like 100th of a Bitcoin, then they go and buy some. So like in the same sense, like if people know they can trade something fractionalized, all else being equal, it should make sense that its volume increases. But um most people aren't using, well, I guess I mean no, that's not true. Lots of people are speculating, are using NFTs as a speculative vehicle. but um, not in such a granular way, I guess. People don't really try to express their views in so granular a matter. Like you don't hear people saying like, "Oh man, like monkeys, they're so expensive. Like 200 Sol. I can't afford that. I just want to buy a fraction of it. I just want a tenth of a monkey." Like you don't hear like demand for that, right? Like if people can't buy a monkey, they just go to some other NFT that they can afford and speculate there. Um, yeah, and I mean, then there's also the issue of like, I mean, usually there is like some kind of utility attached to NFTs. Like, if you have an NFT, you can join this Discord or something. And if you can't do that with a fraction, then, which I mean is most often the case, right? You can't. Then that kind of hurts the value proposition of these fractionalized NFTs. Like it really does just make it about speculation, right? But it's speculation with extra steps, so it's kind of cumbersome. Um, yeah, I don't know. I'm kind of rambling. Do you like my rambling? Are we losing our Twitter crowd? Where's our 1,000 listeners today? No one came here to hear me talk about fractionalized NFTs. That much I am sure of. All right, well, yeah. Sorry, my thoughts are so jumbled, but I hope that that was slightly interesting, at least. Yeah. All right. Well, anyone have any more questions? If someone on Twitter has questions, I can bring you on stage too. Just let me know. Took a sip. Giving you guys the play. Wait, what's the term? Play by play. Yeah. On my sip game. Let's see. No requests to speak. All right. Well, in that case, I think I'm gonna call it. Um, Even though I think someone just joined. Oh, Sticks G Fox listening on Discord and Twitter. Or wait, no, he left Twitter and joined on Discord. Interesting. No idea. No idea what he's trying to do there. Don't worry, guys. I recorded it on Twitter, unlike Sticks G Fox. Not recording yesterday. Sorry, man. I just had to do the stab. All right. Well, yeah. Oh wait, let me check. What is this? Oh, lol. Twitter was bugging out. Shameful I didn't record. Yeah, people were sad. Maybe next time. Um, cool. All right. Well, thanks, guys. Thanks for showing up once again. Thanks for the good questions. Um, yeah. Uh, I'll see you back in the Discord. Peace out.